Hello everybody and welcome to another video about KULR. I've been loving this stock more and more, but the question today specifically is, would I buy it for the space battery business? Would I buy the space biz? Because I look at that business as a margin of safety for the BTC Treasury company that KULR is. And I think it's pretty rare to find a BTC Treasury company that has an actual business under it that has value, that used to have value in the market, and that still has value with the market, and that is growing fast. So what I love about KULR is that it's an actual company with a high growth business. They are not just a Bitcoin Treasury company. This is not all it is. KULR is a company that is growing fast, that has high revenue growth and a high total addressable market. In fact, they show in their investor presentation that the market could be 1.8 trillion by 2035 for the space economy, and both their products and their services mostly serve the space industry. They do batteries for the ISS, for the space station. They do batteries for the Mars rover. They do batteries for NASA, provide services to NASA, check batteries for NASA. This is a space battery business. What I like about it is it's growing very fast. Not only do you have a cash on the balance sheet, they do have a bunch of that. They have no debt. They've acquired the Bitcoin, so they have quite a bit of liquidity, right? 85 million if you include the Bitcoin and some of the cash that they have left on the balance sheet. So no debt, strong cash position. But more importantly, for an operating company, if I'm going to analyze it, is the revenue growth. And the revenue growth is accelerating. This is the last earnings call, right? On the last earnings call, Michael Moe, the CEO, said revenue would double by the end of 2025. And in this call, right, the most recent one, was it 3 weeks ago or something, Michael Moe was asked again, is the revenue going to double this year in 2025? And Michael Moe said, yes, we still expect this to happen in 2025, meaning the revenue doubling. So I have a company here where the revenue is doubling, the underlying business, the operating business is working, and it's optimized for gross margin, as I'll show you later. It's not quite optimized for EBITDA just yet, but it's optimized for gross margin. And it's also a BTC Treasury company, and the stock is, ever since adopting the BTC Treasury business, it's trading roughly at an all-time low. It's down 75% from the peak at the moment where they started acquiring the Bitcoin. Are we going to get into peak hype again? I don't know, but I don't understand why this candidate hasn't recovered, especially for being in the space business. Again, it's a sector that I think is a little early to invest, but because there's a Bitcoin Treasury company associated with it, in many ways, it's the only space company that I find investable. In many ways, I do own a little bit of Rocket Lab, but aside from that, it's pretty darn interesting to me. It's an interesting position, an interesting play. So I want to focus on the business itself today, the operating business. So KULR, they're in the space battery business. They were founded in San Diego, but of course they moved to Houston because they are right across the Johnson Space Center. And why did they move to Houston? Because this is where you get the space business. All of the missions, all of the USA projects, they're run in Houston, and so they moved there, and they have a lot of customers. NASA coordinating a lot of these customers, but they work in the aerospace business. They have a FAA as a customer, Lockheed Martin as a customer. So providing batteries for all of these entities. Again, how many companies can brag of having products on Mars? And the reason why I say that is to show that this is probably a very hard business to do, and it's probably not that easy to copy. I had a conversation recently with an expert in the field. Battery thermal management is super complicated. It's definitely not that easy. This is high level engineering. Relocating to Texas was smart. It means that they can apply to grants in Texas. Texas wants to be the space hub of the world, and so they have very interesting grants like this one. They were able to get $6.7 million to develop the battery performance, a battery that works at minus 60 degrees Celsius. How is that even possible? I don't know. We all know batteries fail really quickly at low temperatures, and so I gotta believe, when I look at this and when I look at the Space Commission giving them this much money, I gotta believe that they have a special technology under the hood, enough for NASA to buy the products, enough for a lot of companies to buy the product, enough for NASA to select this product to be sent to Mars. So they have two businesses. One that is stagnant, and by I say, it could be up 20% next year. I don't know, but I see a minus 8% on the services business. The services business seems to be like a steady Eddie business. Last video, I showed you how they had a custom. They had battery rating, like they would take third-party batteries and they would test them, and then would give all of the data to NASA, and then they would put them back together and certify them. They do a bunch of other things like simulation, analysis, electrical testing, extended volume calorimetry. I mean, this is some pretty deep tech. This is some pretty edgy tech. I have no doubt that there's not a lot of people who do that, and it's very specialized, and so you've kind of secured a nice little business for you in that space. The bigger business that is growing at, you see year over year from Q1 24 to Q1 25, this one grew at 89%, and that is the products business, and it's namely very thermal solutions, storage solutions, thermal solutions, thermal runaway solutions. They have vibration plates for space, but I think the bigger business in there is the actual space batteries, which are next generation. And these space batteries, you need them in satellites, you need them in anything you send to space. And so as the market of space grows, I can see KULR being one of the top products provider. And so I see why the market sees a lot of potential in that. Space batteries are ultra specialized. They have to withstand extremely low temperatures, and because of their NASA relationship, because they're a 10-year-old company now, they have these privileged relationships that they've developed over the years. Like I said, their headquarters is right across from NASA, and you can see a little list of customers right here. I showed this already. Now, they entered a third business, which I want to talk about because it's what the CEO keeps talking about right now. So of course he's launching it. That's the topic of the day, and it's the Apogee bet and the Exia bet. The Apogee is going to be likely the next generation that they will commercialize. I think it's only available in Germany. Anyways, they are in the exoskeleton business. The exoskeleton business. So this is this robot thing, and you put it on the back of workers, and it helps you lift heavy stuff. It helps you lift it, and then you get a nice KPI dashboard where you can report to HR all of the benefits that the exoskeleton has provided to you. It's a little bit different than the humanoid space. I would argue eventually the humanoid space is going to take over that space. But if you follow the humanoid space pretty closely, human labor is going to remain cheap for a very long time because it's going to take us a long while to replace all humans with robots. We got to make these robots. We have to build these robots, and you're looking at decades to build enough robots to replace all factory workers. So biological workers are still going to remain a thing for a little while, and this is kind of the transitional product because it's a robot with a human worker, and so it makes the human worker more efficient, more productive, etc. Frankly, I wouldn't look at this business. The reason why I look at this business is because it's owned by KULR, and so I have to analyze it because I want to own KULR for the treasury company with the margin of safety of the space battery business. But I understand why they would do this, because this is ready for prime time, right? Humanoids, robots are not ready for prime time. This is ready for prime time too. I tried to get an answer to this. I couldn't get an answer to this. From what I understand, the partnership is also going to be related to the batteries, but I have a really hard time finding information about that, even though they say that these applications demand better thermal management and better battery, a high quality, high performance battery. And they have the marketing and distribution rights in North America for KULR. So it's all great. It's all nice. But when I look in the back of this thing, it's a Makita battery. So you got to do something about the marketing here. Why can't this be a KULR battery, right? I would like this to be a KULR battery. Eventually, I'm sure it will be. And this has a lot of customers, and the German Bionic is the name of the company. They've been selling on their own for a while. You can see you have a lot of German companies, but you also have Canadian Tire, which Canadian Tire, did you know, is not a tire store, it's a department store. I'm very proud I know this little thing. But anyways, so they sold it in Canada, and they sold it quite a bit in Germany, and so, you know, they have customers. It's, you know, it's an early project. You know, in the mad days, no, I'm not going to call them mad days because I don't think they were mad days. I think monetary policy was correct in 2021. But in those days, this partnership, this would be a standalone company. This standalone company in those days could be worth hundreds of millions of dollars. So the fact that they have this in there provides a very nice optionality in my view, although this is not the type of business that I would look at normally. But in this instance, I will give them credit for it. Traditional analysts are going to have an issue analyzing anything below the gross profit line on this stock. I think they are optimized for a gross margin. The gross margin is about 45%. They seem optimized for that for me. But, you know, when you look at the selling costs, for example, right there, you can see they're pretty high. And when you can look at the R&D, you can see they're pretty high. And when you look at operating expenses, you can see they're also pretty high. And so this is a matter of debate, right? GAAP says that you have to classify things the way you classify them. Is R&D an expense? You know, I don't think R&D is ever an expense in my view. R&D is always a major investment into the future, especially with agile companies. Is selling cost an expense? Well, you know, this is all debatable. You know, how much did they pay for that partnership with Apogee? Is it part of the selling cost? What do you include in the selling cost? You know, the prime example I give on this channel about selling costs not being an expense is, for example, HIMS spending a bunch of money to acquire a subscription, a repeat customer who's going to have a subscription. Well, KULR, I think these space batteries, you could have a lot of repeat buys. Once you have a vendor certified with a big company, they're just going to keep reordering. This is not a one-time sale. These are long-term relationships. So you know, is selling cost an expense here? Maybe, maybe not. It depends on which one you look at. Is R&D an expense? In my view, no. And then operating expense, unfortunately, I don't have time today to look too deeply into the 10K, but I think some of it may have to do with the mining contracts, because they got a bunch of mining contracts. That's another can of worms that we can discuss. It's their overweight to acquire Bitcoin. I think that might be a little bit into this. We have to see what they put into over operating expense. Keep in mind, whenever you analyze a company like this, is that it's going to be poorly treated with GAAP metrics, because GAAP metrics were really, that's my opinion, but they were really created for an industrial company. Like GAAP metrics were great for a traditional automaker, right? Say a Toyota. Sell a Lexus for $60,000. How much does it cost to sell a Lexus? It costs $7,000 worth of advertising in magazines and television and etc. to sell a Lexus. I think it's very hard to argue that a product that people buy only every 8 to 10 years, I think it's very hard to argue that 7K is not an expense. That 7K is in fact an expense. You had to spend it to sell the product. There's not going to be a repeat. It's not an investment in the future. Although some people could argue, oh well, the timeless ads, they add value all the time. The whole Coca-Cola argument, the whole Coca-Cola always loses money on their ads argument. But the R&D is the same story, right? Is the R&D a cost in the era of traditional auto companies from the 60s? Well, yeah, they clearly see it as a cost. That's why they have so much outsourcing, up to 4 levels of outsourcing companies. Layer 1, Layer 2, Layer 3 outsourcing company. You outsource everything because it's a cost, and they don't value R&D like a modern company does. And so again, these operating expenses, in my view, it's often very much misguided, and that's how you get with, say, cars. Elon Musk always complaining about cars haven't changed their infrastructure since the 40s. I can think of a lot of industries who haven't changed much since the 40s. Like another example that comes to mind is HVAC. It's entirely outdated, but it's from back in the day, right? And so you don't invest in R&D once you have a product that is good enough. This is the back in the day thinking. The modern day thinking is you gotta always do it better, stronger, cheaper, always improve, iterate multiple times until you get the best product. So this is a company where people are going to need to have to make their own judgment. I'm making my judgment on this company. I like the top line revenue growth at 100%. I think it's fast. I think it's great. It's the type of company I would look at in that case. I like the gross margin at 45% for a company that produces hardware, right? If it was a pure software play, I wouldn't like it as much. But for a hardware company, I think 45% is good. Not excellent, but it's good. It's good. And that provides me a huge margin of safety in my view. Sure, KULR's core business is not my traditional BTD stock. But KULR's core business could be a traditional Cathie Wood stocks. In fact, if you look at this stock, Cathie Wood doesn't own it. I'm surprised she doesn't own it. I consider this like right in the playbook of Cathie Wood. This is your stereotypical Cathie Wood stock, high potential, disruption, amazing technology, but earlier than the typical business I would invest in. The typical business I would invest in would have positive adjusted EBITDA. This one doesn't have that just yet. But that's Cathie Wood has made a name buying these businesses. I haven't. The point is that this business has value to an investor that perhaps is a tad bit more of a risk taker than I do. This business is going to have value. I cannot help, and I am sorry for my Enphase people who follow my channel, but I cannot help, because Enphase people love Enovix, I cannot help comparing KULR to Enovix. Granted, Enovix is more batteries for consumer electronics and phones. KULR is space batteries. Enovix is bigger. They have a big manufacturing facility in Asia. Granted. But still, when I look at the stock price, when I look at the valuation of the stock price compared to the sales, when I look at the technologies, they're both doing batteries. They're both in the battery space. They're both not optimized for EBITDA. Enovix, arguably, when I look, they're not even optimized for gross margin. Again, don't be mad if I said that, but they're going to be optimized someday for gross margin. The point I'm making here in using Enovix as a possible comparison to KULR is that batteries are hard to make, and the market grants valuation to these companies because batteries are notoriously hard, and I think space batteries, are much harder. Minus 60-degree batteries are much harder. Any material who lasts a long time in minus 60 degrees is probably much better. In fact, go about your day and look at the operating manuals of anything you buy. There's nothing you buy that works at below 60 degrees. KULR does, and that's pretty impressive in my view. And of course, the best part about KULR, which I've talked about before, is the fact that they are a BTC Treasury company who's going to be able to monetize that price to NAV, and they have a price to NAV of 4.24. They're going to be able to monetize a price to NAV which is not really based on the Bitcoin expectations or based on the accumulation of Bitcoin expectation, or what some people would say based on the hype. If you happen to believe that all BTC Treasury companies are overvalued, if you would be someone who would think, for example, that MetaPlanet is overvalued, well, you would look at KULR, you would say, well, actually, that price to NAV for KULR is mostly due to the market giving a lot of hope and a lot of credit to the underlying battery technology, right? They're a space battery company. Cooler, lighter, safer. Now you understand why a company is called KULR, by the way, because it's a space battery, and so they need to work in a cool environment, right? So anyways, they're going to be able to monetize that space battery business. NAV, the price to NAV. The price to NAV of the space battery business, they're going to be able to monetize. And my guess is that that price to NAV is going to be much more stable than the price to NAV of, say, a traditional BTC Treasury company. A traditional BTC Treasury company is going to have volatility in the price to NAV, much greater perhaps than the volatility of a price to NAV that you're going to find for KULR. Or in other words, the lasting impact, the long lastingness of the price to NAV for KULR may be much longer than for another BTC Treasury company, because another BTC Treasury company, the more they tap the ATM, the more they erode the price to NAV. I think that should happen a little bit for KULR, but maybe it will happen less because there is a shareholder base which is big on this stock because of the space technology, because of the space biz, as I call it. KULR had good news recently. They joined the Russell 3000. That's going to mean inflow to the stock. And I put this interview here. Also interesting. And this I came back to this interview. This was in my history. And I don't understand. The comments are not visible anymore. There used to be comments on this video. And people were just clueless in the comment section on this video. They were like, oh, they're just diluting. You know, the traditional FUD you hear of BTC Treasury companies, you had this all over in the comment section, which tells me that the shareholder base who came to watch this video was interested in the stock for space, not interested in the stock for actual Bitcoin Treasury companies. Because if you know Bitcoin Treasury companies, you know that dilution is a good thing. Watch my video about the common ATM of MicroStrategy. Anyways, the BTC yield has been amazing. They've had 220%. I don't know why I didn't put the screenshot. It's been amazing, over 200% so far this year in Bitcoin yield, and that's because of a high MNAV. The MNAV is a 4.2. That's amazing. I think that MNAV, like I said, is mostly due not to Bitcoin speculation. The Russell 3000 inclusion is coming, so that's new inflows. Their goal is to get to as fast as possible to $1,000, which is going to be outstanding, in my view, because if you get to $1,000, you are going to be able to be eligible to ETFs like this one, OwnB, which owns every company that has more than 1,000 Bitcoins on their balance sheet. So that's probably another inflow of money. And the last thing I want to say, which I didn't focus on in a second, but you can see. So thinking about this company, the market cap of this company is 360 million. 360 million is the market cap of this company. And they have an ATM going on. Look at the ATM. Their ATM, which was filed on May 27, 2025, so this is fresh info, right? This is 12 days old, fresh info, is for $300 million. So they have an ATM coming of $300 million, and the market cap of the company is $360 million. So the ATM, when fully consumed, may double the size of that company. And hopefully that doubling of the size of the company, much of that money goes towards acquiring Bitcoin. Perhaps some of it goes to the space biz, but hopefully most of it goes towards acquiring Bitcoin. So I like this stock a lot. I like it very much right now. And my most preferred Bitcoin treasury companies right now are MicroStrategy, MetaPlanet, and KULR. I like these three a lot. I like these three the most. But as always, as you know, this is not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.